You don't need me to tell you about market volatility. The markets have been absolutely crazy and everybody knows it. One week they zoom up by hundreds of points. The next week they go down by the same amount or even worse. I know what you're thinking. When the markets take off, you're saying to yourself, did I miss out on a rally? Should I buy? What should I do? When the markets go down and you've bought, you're saying, am I an idiot? Should I be all in cash? What should I do to deal with this crazy market volatility? I think the problem basically is that nobody puts market volatility in any kind of a historical perspective. So what I did, and I hope this will be helpful to you, I took 50 years of data. Now, past data is not necessarily predictive of the future, but at least you can adjust your expectations based upon long-term historical data. So if you look at the markets over a 50-year period, let's assume you had a portfolio that was 100% stocks. Now, you and I both know that nobody should have a portfolio, or almost nobody, that's 100% stocks because it's far too risky. But I'm going to assume that you held 100% stock position. If you held that portfolio for a given day over the last 50 years, how likely is it that you would make money, and how likely is it that you would lose money? The data is really very clear. You'd make money about half the time, you'd lose money about half the time. So overall, you wouldn't make very much money, you'd basically break even. So we know that you shouldn't be holding stocks for a very short period of time, like a day. But look what happens if we run it out to a year. Over any 1 year period, you would make money 80% of the time, and you'd be in negative territory 20% of the time. So that's far better than holding it for a day. But now let's look what happens when we stretch it out to a 5-year period. Over any 5-year period in the last 50 years, your portfolio would have been in the black 98% of the time. But wait, look what happens if you were to hold your portfolio for a 10-year period. Your portfolio would have made money 100% of those 10-year periods. So what's the point? Ignore the financial media and all the financial experts who are telling you they know what direction the markets are going to go in. They don't have the ability to predict the future. They can't time the markets. Stocks are not for short-term investors. If you have less than a 5-year time period, you have no business being in the stock market. You want to hold your stock position for a minimum of 5 years, and if you have a maximum of 12 years, you can have an even bigger position in stocks. I hope you found this helpful. My goal is to fundamentally change the way you think about investing. Let me know if I succeeded.